Hey there, this is Coin Doctor for Fast Crypto Coins with our market analysis. Signs that the crypto bubble will end. Part 1, Markets. Well, first of all, just look at the charts. Now, whether you're invested in crypto or whether you're new to crypto, everybody hears it's a bubble. And as soon as anybody sees a chart like this, they assume they are dealing with something that could be a bubble. And that is simply a parabolic rise. However, if you look at one of our other videos on the anatomy of a bubble, you realize that just because something looks parabolic does not mean it's going to end tomorrow. The entire S&P 500, if you look at it dating back 60 years, is a parabolic bubble. So that doesn't mean it's going to end tomorrow either. Bottom line is, everybody fears about getting in. They're always worried, is it too late? And if that talk continues to dominate, then that's going to prevent new money from entering the market. All the people who are in the market, like myself, who watch it 6 hours a day, every day for the last many months, will all start be trading amongst each other, and then eventually people will remove money and things will level off. However, it may not. Parabolic charts do not continue forever unless they become accepted as some kind of worldwide gold standard like the S&P 500 has. Cryptocurrency is a brand new asset class. It's going to take time. It could take up to a decade to reach some degree of worldwide acceptance. But the bottom line is it is a new asset class. And there are very few new asset classes that will develop in someone's lifetime. So it is extremely important, if you want to be in this space, to realize that yes, there will be some potential ups and downs. But the bottom line about a parabolic chart is that it's ultimately trying to find the true value of the asset it is tracking. And if the value of the asset it is tracking is much higher than the estimate right now, then the asset is still undervalued. And that's what you have to decide for yourself. It is, based on this chart, hard to expect another 10x though in 2018 like 2017. So the investors that do go in expecting a 10x could get flushed out quickly. That could level out the market. Large early holders who now represent the so-called whales, I hate that term, but everybody just throws the term out, oh, the whales are moving the market. You don't know who's moving the market, by the way. Anytime someone writes a post about the whales, unless they are a whale or know the whale and the whale's right there in the room with them, I don't care. Bottom line is the early holders might feel that the run is over. They might take out half, book a bunch of profits, and then still run with the rest of it. But that half that they've taken out because they got into crypto in 2015 is going to be massive. So the reaction of these long-term holders to the beginnings of the appearance of a two-sided market will determine if this is a bubble that pops or if we melt and refreeze over time. This is not a bubble. I don't think it is a bubble. It's not going to pop. We're not going to have a symmetric downslope just like our upslope. This is going to be like an ice cube that's going to freeze and thaw back and forth. And I think it's going to get bigger over time, but we have to look at the charts to see. Here's total market capitalization of cryptocurrency, the entire cryptocurrency space, in the month of December of 2017. And you see the difference between a steady increase of money and a leveling off or the appearance of a two-sided market. Whether this two-sided market is temporary and is going to continue, I don't know. And you have to keep looking at the depths of the lows, the heights of the highs, the depths of the lows, the heights of the highs, to try to get an idea of, is new money coming in this space? And even though we are balancing, are we continuing to attract new money or not? Time is accelerated in the crypto space. Some people have said time is accelerated 50x compared to other markets, meaning one crypto day is like 50 days in another market. So what one person's sale could be at any moment in time could be another person's crash. And that tug of war is going to be evident, and it's going to show up in the charts in the short term. So you need to watch the market every day. We are used to seeing days that are all green. We are used to seeing an occasional day that's all red where the people proclaim, oh, the whales are coming in and taking their profits. But when we start to see more of a mixture of both, certain projects up, certain projects down, almost on a daily basis, and we don't see it all green, all red, that's when we know we've got a two-sided market. And also, don't just watch your own portfolio. You need to watch the entire space. You need to watch the chart that I mentioned on the last page, which is total market cap, in addition to just Bitcoin alone, in addition to just other top 10 coins alone. If volatility remains high, people who are not experienced traders will get flushed out of a two-sided market because the average person, their average emotional makeup, they are more likely to jump ship on a down 20 day than they are to take profits on an up 20 day. And that's just human nature. So every little downturn, we're going to see people jump ship and not come back. Watch for it. Worldwide market correction. 2017 has been a very special year. There has been no worldwide market corrections at all. And when I talk about the market, I'm talking about stocks mainly, because that's still the primary investment vehicle. Market corrections of 10% or more tend to happen without a catalyst. I am not counting North Korea or other rogue nations or other world unrest as one of my reasons crypto could crash in 2018 and beyond. I'm not counting that at all, because that's a given. Everyone knows that. But market corrections of 10% tend to happen without a news event. They just happen. Crypto has never been correlated to the market, but the larger crypto market has never been tested by a 10% correlation. We have seen nothing but worldwide market expansion during 2017, which has given investors the disposable income to help create this new asset class called cryptocurrency. But remember that the people who are savvy enough to be invested in crypto are likely invested in the markets as well. Japan and Korea being two of the most heavily invested countries in cryptocurrency. Those are their exchanges. The USA, of course, China, Australia, and Europe. To show you the environment that has allowed cryptocurrency to develop as an asset class, let's look at the charts. 2017, this is the Nikkei, the Japan Stock Index. Here's the Kospi in Korea. Here's the Hong Kong Stock Market Index. Previously considered one of the more volatile indices, by the way. Very steady. The NASDAQ 100 in the US, tech stocks. So what's going to happen is when there is one of these market corrections, and the thing is, this is a global market. This could happen in any market. Let's say it happens in the Kospi or the Nikkei. A 10% drop that's sudden will result in something called a margin call. A margin call is where people are invested in the stock market. They have not all of the cash to back up their security ownership in their account. So what happens is when the value of that account drops, the brokerage will ask for more cash. And if that cash is not deposited, the brokerage will automatically sell shares. I don't think too many people at that point are going to want to just sell their shares at a 10% loss and hold on to every bit of the cryptocurrency they have. They're going to liquidate cryptocurrency to cash. They're going to do it quickly, and you should see it happen at the same time. I don't think the magnitude will be the same, meaning I don't think a 10% stock market correction will lead to 10% of the money leaving the cryptocurrency, or 20 or 30% leaving the cryptocurrency space and leaving forever, but it's going to rock the world of everyone around the world. Now, if we were at the point where cryptocurrency could be used like cash, if we could pay the rent, if we could buy food, if we could pay electricity, the type of things people need to hoard for in case of an economic recession or depression, then the cryptocurrency market would be decoupled from the stock market, but it's not yet. Yes, there are limited merchants we could use cryptocurrency for, and there is a valid reason to hold it. However, you can't survive 100% on it, especially with these old line institutions. Therefore, there will be liquidation. Typically, market corrections are contagious. If we see it in one market, we'll see it halfway around the world the next day. And no, the U.S. doesn't have to start every single worldwide move. Sometimes the U.S. is a victim of moves in other countries, as we saw a couple years ago when it seemed like every time that the Shanghai market moved, the U.S. market moved with it. Exchange failures. We all know about Mt. Gox and the hacking, but what I'm more concerned about in the next year or two is the inability of the exchanges to scale to meet demand. Because if exchanges cannot take in new members, take on new coins, handle higher volume, bring more fiat currency into the system, then we can't grow our total market cap. And if we don't grow our total market cap, then we won't grow our asset class. So how do you know this is happening? Big exchanges stop adding new coins. Big exchanges start removing coins from their portfolio. There's downtime, there's overload. I strongly suggest you log into your exchanges every day, even if you don't have a transaction to make, just to make sure they're up, just to make sure they're running. Will exchanges close to new members, and will they do it over the long term? That leveling off we see at market cap at the end of 2017 is probably just as much due to exchanges slow at allowing new members to bring their fiat currency in as it is due to market sentiment of current holders. Delays in depositing of fiat and customer service shortages are also a big concern. Security concerns are always there. However, we are seeing there are definitely some small exchanges that are unsecure. We have tested the market with news of small exchange failures, like one in Korea in December of 2017, and it did not rock the market. So while you want to be extra careful whenever you give your information over to a small exchange, get your coins off the exchange immediately. We have videos on all the best practices. Please watch them and make sure, but you don't want to leave your money on exchanges. And of course, they're going to be scam exchanges. They're going to be scams. Either they're going to have very wide bid-ask spreads and people won't understand the difference, or they'll just be a complete scam and they'll try to steal personal information. This will lead to bad publicity for the space, could scare new investment away. Human error and hacking. Notice I mentioned human error before hacking, because if this space ends up getting the reputation that when you put money in and you can't get money out, or your money is hopelessly lost, then again, that will not attract new money to the space. And the problem is, and we have a video again on how to transfer cryptocurrency. Nobody who has been in the cryptocurrency space for any amount of time can say they have never lost a coin, can say they have never lost a password, they have never had a two-factor authenticator go bad. They have never forgotten where they put their coins. It happens to everyone. But if we can all minimize it, then the space will grow, and newer, less savvy investors will learn how to enter the space properly and will not be victims not only of hacking, but of their own stupidity. So the keys we have to watch for is, will there be a major exchange hacking? Will there be a lot of the narrative of people losing their coins because it's too hard to get the addresses right, sending coins to the wrong wallet, the inability to properly use two-factor? All of these things, if this becomes the narrative of the space and it fails to attract new money that is less tech savvy, then the space will level off. Algorithmic trading. As an S&P 500 investor, I hate algorithmic trading because there are big machines with a lot of money behind them that will just decide at 2 o'clock on a Friday afternoon, it's time to sell off tech stocks and buy a bunch of mining companies and oil companies. And all of a sudden, your Microsoft and your Apple and your Amazon and your Google will all drop precipitously out of nowhere on no news. It is like the big money controls the market, and we see it all the time on the S&P 500, and I hate it. Can we see this come over to crypto? Well, there are multiple markets, there's multiple exchanges, but it is possible with the right hardware and software to write algorithmic trading that could shop 20 different exchanges. And what algorithmic trading tends to do is try to create an arbitrage or an advantage for itself, not pump new money into the exchanges. So what if we saw volume on the exchanges 5x because of algorithmic trading, yet that trading was not long-term buys and holds, that trading was taking coins from one exchange, moving them to another, trying to attempt arbitrage between exchanges. While it will bring the prices among the exchanges closer together, it will also clog the network. And if the network can't expand as fast as algorithmic trading clogs it up, that will lead to problems with the expansion of our space. So how do you know this is happening? Again, look at CoinMarketCap every day. Watch for things. If we tend to see days that are part red, part green, and we tend to see coins that are tied to a certain country or sector, all moving together in lockstep, all the coins hooked up with exchanges, say, all the coins that support a certain protocol, say, all the coins that are popular in a certain country, all move together in a similar magnitude on the same day, that means we are likely seeing less human trading, more algorithmic trading, and it's just the beginning. It's just a warning sign. Mainstream alternatives. Most major companies out there understand the role of blockchain and the potential uses for blockchain. But will the mainstream take over this space instead of partnering with the companies that are in this space that we're currently investing with? And that's going to be the big thing. Over the next year, you want to look and see where are the legitimate news items where major mainstream companies, governments, even central banks are partnering with known cryptocurrencies. You know, the poster child for this is Ripple. which basically entered the market not as a transactional currency, but as one that partners with businesses to serve a purpose, a very specific purpose. But if we go through the next year and we don't see major companies lining up to partner with existing companies, that doesn't mean they're ignoring the space. It means they're developing their own blockchains on the side. And when they develop their own blockchains on the side, they are not going to participate in our markets. They're going to do it on their own terms. Remember, anyone can hire an engineer and make their own blockchain. So could there be a Facebook coin, a Google coin, coins for individual banks and brokerages? Could these companies all use their own cryptocurrency as kind of like a frequent flyer mile or rewards points? Possibly Google using a YouTube coin, paying the coin to some of its better users instead of cash, allowing that coin to be spent on other things, maybe even products like Google Home products or things like that. It's entirely possible that if these coins are limited in supply, that they could go up in value. People would want to invest and speculate in them, and you can see the whole thing. Imagine if when frequent flyer programs hit the market in the 1980s, that there was a secondary electronic market for selling and buying these points. And if I could decide at a moment's notice, if I have to fly somewhere tomorrow, should I pay cash to the airline or should I go on the secondary market and buy frequent flyer points? That is very similar to how cryptocurrencies could be used. And as we have more mainstream named cryptocurrencies that they develop, they could potentially sap money out of the current market of all these innovative entrepreneur companies that you've never heard. Destruction of the Bitcoin brand is my seventh and final concern, the seventh and final reason why the cryptocurrency space could contract, crash, bubble burst, whatever you want to call it. If we continue to see that the Bitcoin development team remains quiet, if we continue to endure criticism from people behind Bitcoin Cash and other transactional currencies tarnishing Bitcoin, if there's no news on the Lightning Network, if there are continued forks of Bitcoin that don't produce value, then the overall value of the brand is going to go down. And if the value of our flagship brand goes down, then we are not going to be able to attract new money to the space. Because granted, many of you watching the video could name probably 100 different other cryptocurrencies. Most people can only name Bitcoin. And if Bitcoin looks bad, then the whole space looks bad. I liken Bitcoin to our grandfather. Possibly, say you had a grandfather who won a gold medal in the Olympics 50 years ago. Okay, you know he can't win a gold medal now, but you respect him for what he did, and you take care of him, and you learn from his wisdom. That is what Bitcoin is. Even though 2009 is not very old, Bitcoin is elderly in this market, and we need to take care of it. We need to help position it as our flagship, as a store of value, and not focus so much on its transaction speed. And if we as a community can nurture the Bitcoin brand, then it will grow. The positive sign we see for the Bitcoin brand coming up is if we can get a stock ETF in Bitcoin out there. Because with futures and then adding in stock, there will be the ability to invest in Bitcoin, trade Bitcoin without anything moving on the actual Bitcoin network. So the slowness of the Bitcoin network won't matter at that point. So as time goes by and we don't see progress for a stock ETF, that is going to be very negative for this space because we need Bitcoin to remain our flagship. So there's a lot of things here to think about. Remember, cryptocurrency investing and trading carries a significant amount of risk. You could lose your entire investment. Fast Crypto Coins is not a registered investment advisor. This content's for educational purposes only and does not constitute investment advice, nor should the discussion of any coin be considered a trade recommendation. You must do your own homework from multiple sources regarding any cryptocurrency investment. Note the date and time of this video, since cryptocurrency environment can change rapidly without notice. The elements of this video may be extremely time sensitive, and this video is current only for the day it was posted. Well, please subscribe to our channel and check for other videos, both on getting started in cryptocurrency, mastering cryptocurrency, and the latest news and market analysis. Thanks again for watching. This is Coin Doctor signing off. Goodbye.